Hello, today is September 24th, 2016. We had a few calls Thursday night. We said absent the gap over Thursday's high that lower prices should print. I was looking for a market which hit its high early, dropped all day long and closed near the low. I said the ideal situation would be if we gapped down and hit this high here to fill the gap, and that happened. During the day, MEJT here said ultimately higher prices would print. They did. This was the minimum. We usually get a bit more than that. It also said in the afternoon this was a false move and that after this time prices would return to this level. It stopped at the MEJT resistance level. We have positive and negative things in this chart. This is a pattern which usually closes near the day's high. When that doesn't happen, it's usually negative unless we gap up and take out the high promptly. However, we gap down, hit a low, a new low, dropped all day, couldn't take out this middle of the day low. That's usually positive unless we gap down, take out this low promptly. So the commonest thing is that we have a gap opening outside, quickly trade outside of the day's range. There are a few reasons I think the gap is going to be up, even though I think the long-term pattern is negative, which I'll go over in just a minute. One reason I think the gap is going to be up is the last 5 minutes featured a wall of selling into the close. Also, this retracement was just a Fibonacci retracement of the recent decline. So it stopped to the support level. But regardless of whether we get the gap up in prompt trade outside the day's range Monday, I think the odds are good this high is going to hold. Let's go over some of the reasons. This was my old count. I was never thrilled with it. Decided to see if I could come up with something else, and I came up with this one. Here's your purple A, B, and here's your C. There's some interesting Fibonacci relationships here. If you take your purple A, you'll see if C ends there, it's about equal to 0.5. If you look within purple C, and that's your A, there's your B, equal to 0.618. If you go further out, we'll compare here's wave gray A. I think gray B has completed. We'll show that brown A of B has a nice Fibonacci relationship, 0.8866 to brown A of A. If you look at the B, you look at gray A, here's brown B, and there's brown B, that's nice 50%. And now if you look at wave C and compare it to what just completed, you'll see it's right at the 61.8. So we have some nice Fibonacci relationships. If you look at all of gray B and compare that to gray A, you just miss an 88.66. So I think this is a more aesthetic count. If this is the end of gray B, we can use Fibonacci ratios to come up with a target for gray C. It's not the one I want. Well, here's your weekly chart. Here's your A. Here's B. If that completed over there, you can see we have targets around 1855, 1755, and 1654. And what's interesting, if you look at the MEJT targets since March, which have not worked, which have failed, there's a Fibonacci thing at 1855 that's pretty close to our 1854. This is about 1755. That would hit these two in the middle 1700s. And this one at 1654 is pretty close to our 1645. And these are all the failed targets before March of this year. It's not too much in a 3-year period. 2.5 year, I should say. And you'll see that these numbers match up with these numbers quite well, since MEJT targets are typically overshot, So that would make a nice picture if that worked. So I think we've completed gray B. I think a big wave C and gray down is coming. That being said, I think there's a gap open Monday, which likely will be up, but that's not where the money is going to be made. And that's today's call.